Anurag, always a pleasure having you on ET Now. Let's get in your opening thoughts on this particular matter. Now, global markets, we were just talking about that. They have been correcting and global leaders are sounding alarm bells. OpenAI CEO Sam Altman himself. And that, especially after pledging millions in this technology. So is the AI bubble about to pop that we are seeing? And is this headed the dot-com way?
So, Sumita, good evening to you and viewers. Always a pleasure on being on ET Now. My connection is a bit glitchy, but I'll try and make my points. Look, I think it is unfair to compare it with the dot-com era because lessons have been learned from that phase. Dot-com, people were chasing eyeballs. There was no real revenue. And outside of Cisco, there were no real revenues of the business models that were being, kind of propped up at that time. And that is something that all came crumbling down. But I think out of that, when the winners like Amazons and Googles, they kind of captured good revenue, they got the valuation that they deserved. So there is a big difference. This time, most of the players who are investing money into AI, they have huge revenues, right? So all these, Amazons, Googles, Microsoft, Meta, Oracle, they have significant revenues as of today. Okay, so that is the first point, which kind of defies the point that, there's no real revenue behind it. Okay, there it is. Second is, which is kind of the biggest point, which is that most of the investment into these data centers is coming from the P&L of these companies. So Meta, if it earns about 200 billion of revenues and about 70 billion of gross profits, what's wrong if it decides to invest about 40 billion of that into data centers, right? It can go wrong, that's fine, but it's an R&D expense. So we got to take it. But it's not that banks are funding it and they are going to be left holding the bag. So which is the important point here? Take it as an R&D investment. It might pay out. If it does, great. If it doesn't pay out, that's fine. Third point, what is a bubble eventually? I would define it as something which is valued 5x to 10x of its original value. Now, look at these 7 companies. They contribute about 35% of the S&P. So about 20, 22 trillion of the market cap of S&P is coming from these 7 companies, which are investing into AI. What if it drops by 30%? That's the most it'll drop, right? Say 30, 40%. So S&P from 100 drops from 100 to say 85. Well, that's not a bubble, right? That's a reasonable correction. So we can always make a point that, well, look, these companies are probably overvalued. Well, and maybe some of them are, right? But it's not in the bubble zone. You can have a 20, 30% correction, but that's not going to take the whole market down. Outside of that, OpenAI is something which we can all discuss. But even OpenAI, if we say it's a 500 billion valuation, there is a question, and I think I would just leave with this question. It has revenues of 15 to 20 billion today, and it is valued at 500 billion. Looking at the benchmarks, even in the IPO listings in India, is not a bubble. But point is, can it pay the revenues that it is committing to? That's an open question maybe. So that is something we can deliberate.
Since we